And while inflation may be, cumulative around 20% is what they want to tell you, that's not the real world that we're all living in. Welcome to the OVTLYR Trading Room. This is smart trading made simple. This is where we save time, make money, and start winning with less risk together as a team. And for those of you who don't know me, my name is Christopher Uhl. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009. But before we start trading, let's get into the lesson of the day. All right, today's video is, did Jerome Powell, who, like I just mentioned, I got to hang out with a little bit earlier this year, did Jerome Powell just pop the everything bubble? The stock market crash, Tesla stock, Bitcoin. Just throw some keywords into there. Let's see what he has to say. Now, I will say, I don't know this channel. This is Parkev Tate Volsian CFA. I will tell you, a CFA is exceptionally difficult to get. I never try to, because I know a lot of people with CFAs, and they talk about how it basically ruined your life for 2 years just studying for it. So I'm really hoping that this has some great content to go with it.
The central bank in the US may have just popped the everything bubble. 2024 has been an exceptional year for investment assets. Prices for cryptocurrencies, AI stocks, quantum computing stocks, homes, and almost everything have increased substantially. One factor fueling enthusiasm.
Yeah, including the market. Let's do a quick measurement. I saw it was up like roughly 30-ish% for the year, which is really huge, right? Don't be jaded, right? This is not a normal market. And when I say a normal market, right, most markets don't look like a vertical or 45-degree slant over the course of an entire year. So let's go to January 2nd, which I totally missed my January 2nd target. Hang tight real quick while I put that back where it goes. There we go. January 2nd to today, 26.48%. That is a giant number for the year. A giant number. So yeah, the market has been rip-roaring higher.
Enthusiasm for those risky assets was the expectation that inflation had been tamed and the central bank will proceed to cut interest rates multiple times in 2024, in 2025, and in 2026. Chairman Jerome Powell and the committee that sets monetary policy just changed those expectations dramatically. The decrease in some asset prices was almost instant following the central bank's announcement.
Talking about the stock market selling off 3%, which I was talking to my parents this morning, and they don't follow the market like I do, and they're like, "Oh, did you hear the stock market crash?" And I'm like, "Well, I've been in cash for like 3 weeks now, so it really didn't bother me." But I can't necessarily say that a 25 basis point rate cut now caused a 3% sell off in the market when we've had basically an entire full percentage point rate cut during the course of 2024. And we're up 26% something percent. So I would not absolutely say that this is tied to the rate cuts. I think there's a lot more to it.
Some of the frothiest parts of the market, like cryptocurrencies and stocks with expensive valuations like Tesla, took immediate hits. I'm going to share with you
what happened to Tesla. I'm a Tesla car owner, but I'm not a Tesla shares owner. I mean, how far did that go down? Let's be realistic here. Oh, 11%. It was a big sell-off there.
The details of what central bank just did that's causing the stock market to crash and what it could mean for stock market investors like yourself.
I want to thank the Motley Fool for sponsoring this video. Visit Fool
Judge that the Federal Reserve
for the 10 best
on December 18th, 2024. The committee judges that the risks to achieving its employment and inflation goals are roughly in balance. The economic outlook is uncertain, and the committee is attentive to the risks to both sides of the dual mandate. So let me zoom out a little bit and explain what they mean by their dual mandate. So the Federal Reserve, their job is to keep unemployment low and keep inflation low. And what they mean by low for inflation is roughly 2%. And what they mean low for unemployment is somewhere in the range of 3.5% to 5%. The exact target for the unemployment rate is still not known for certain, but somewhere in that range. So they're balancing those two goals. And it is a balancing act, because if the central bank takes policy that helps grow the economy, that's going to bring down inflation. That's going to bring down unemployment, but that's going to increase inflation. When the economy is growing and overheating, it increases inflation. And so there's two sides of that. If the central bank wants to control inflation, the policies that it takes brings down economic activity and slows economic growth and increases job loss and increases unemployment. But the Fed has to balance that, right? Because as an individual, it's not good for you to have out of control inflation. In fact,
Right. And still, even on the opposite end of inflation, right, where inflation has peaked and it's come back down, but it's still prices being 2%, 3%, or whatever higher than they were a year ago when they were 9% higher than the year before, right? So while they have brought inflation down, we still and that is technically called disinflation, right? I am hoping for, and I know this is a slippery slope, but I'm hoping for deflation, where we can see prices going back to what they were just a few years ago. I mean, we are all aware enough to say, hey, my grocery bill is twice as much as it was before COVID, right? We have seen that, right? And while inflation may be, cumulative around 20% is what they want to tell you, that's not the real world that we're all living in, right? I mean, I've even been seeing gas prices come down lately. That's great. But how are we realistically going to get to a point where we're no longer in this cost of living crisis? Because we're all there. Everyone is there. Nobody can say, I dare you to find somebody to say, I am better off today than I was 4 years ago. I dare you to. It's not going to happen, right? So the Fed is trying to figure out, how do people get back to that point where they feel like things are better than they were 4 years ago, because that stimulates the economy, right? If you feel financially strained, you're less likely to go spend money. I would bet you that this Christmas season, it's either going to be one of two ways, right? It can only go one of two ways. It's going to be the most spent of all time because inflation's so high, or it's going to be dramatically lower than years past because people have already burnt out their credit cards, burnt out their savings, and there's nothing left, right? I don't think you're going to see a marginal increase. It's either going to be way higher because of inflation or way lower because people just have no credit card limit left.
in fact, it might be the one thing that's the worst thing that can happen to an economy is out of control inflation. That might be worse than increasing unemployment because the whole financial system will be at risk if inflation gets out of control. And so the central bank has to balance those actions. And up until today, what the central bank had been seeing in 2024 is a persistently decreasing inflation. And so they were able to shift their focus on the unemployment side of the equation because inflation was.
Since we're talking inflation, let's pull an inflation chart. Yeah, that's what I'm talking about here, right? Prices, while they are up, let's say 2.7% is what this number says here for November, right? That's 2.7% higher than it was the year before. Let's do a cumulative inflation chart. I don't want that one chart. That's UK inflation. Hang on. Sorry. US inflation chart since 2020. That's monthly. Here's cumulative. That's what I wanted to see, right? That it's a 45-degree angle up, right? Cumulative inflation means that, the percentage change period over period has slowed, but overall prices are not coming down. They're continuing to go up. And that has been something you've heard me talk about it many times. That has been driving me up a wall where people say, we fixed everything. Everything's great. You haven't fixed everything because prices are still elevated across all asset classes, all consumable goods. It feels like anytime you buy anything, right? Whether it's like a coffee mug or a cheeseburger or your groceries or whatever, right? It feels like it's so much higher than it was just a few years ago because it is.
Was decreasing. They felt that they were confident in decreasing inflation, and so they were lowering interest rates. In fact, they lowered interest rates at this meeting. But what was more important than the decrease in interest rate in this meeting was the forecast for future decreases. And they reduced the forecast for future decreases, and they also told the market that they expect inflation will be much higher than they previously thought. And that
freaking, that sucks.
goes along the lines of what I had been reporting. If you watched my inflation video a couple of weeks ago, I highlighted that this is precisely what the Federal Reserve was going to do. I told you all that a couple of weeks ago, that inflation had been increasing. And to make matters worse, asset prices were getting in bubblicious territory. Things like cryptocurrencies and some stocks like Tesla were getting extremely overvalued. And so all of that enthusiasm fuels inflation because the people that are making money on those investments are then going out and spending that money, and that's overheating the economy. And that's on top of the already accelerating inflation. And so that's precisely what the Federal Reserve did here. They cut interest rates by a quarter point, but they signaled that they're not going to cut interest rates by as much as was previously expected next year and the year after that. Let me share with you those details. So here's the policy projections from the Federal Reserve Board members as of September 18th, 2024. And at this date, they were forecasting that.
I will say, I'm actually enjoying this channel. I feel like I'm learning a lot, and I appreciate that he's got receipts. McDonald's large fries, $3.79. Dude, didn't that used to be $1, right? What happened to the dollar menu at McDonald's? Everything on the dollar menu is like $17 now.
That inflation, core PCE inflation, would be 2.6% in 2024, 2.2% in 2025, and 2% in 2026. That means that it's going towards its target of 2%, right? That's the target for the Federal Reserve, is to keep inflation at or very close to 2%. They don't want zero, because 0% inflation is also bad news for the economy. I won't get into why that's the case. That's a whole nother video I will need to make. But the central bank needs roughly 2% inflation. So in September, they had forecasted 2.6, 2.2, and 2 for the next 3 years. In today's release, they updated that number from 2.6 to 2.8, and then 2.5 and 2.2, and they don't have the inflation rate coming down to 2% until 2027. So a big increase in inflation expectations just from September to the.
Considering we're about to have the largest, basically sweeping change in Washington that possibly have happened since George Washington, we'll see, right? I think those numbers will change dramatically in the next 12 months, next 24 months, right? But projecting something that's 3 years out, I don't put a lot of credence behind that.
December. And part of that increase is undoubtedly the enthusiasm surrounding the elections in the United States, which fueled asset price increases, which fueled increasing spending from consumers, and that led to rising inflation in just these last couple of months. Inflation has accelerated, and I shared with you, I'll link that video at the end of this one, of what I thought of the most recent inflation report. All right, so here I have the September numbers for what's called the dot plot. This is what the central bank committee members pick out as their expected interest rate policy for the respective years. And so you can see 2024, 2025, and all of these dots are individual committee members voting on where they think interest rates should be at those respective times. Okay, so take a look at here. These are the expectations for 2024, where they expect interest rate policy to be. And this is where they expected interest rate policy to be for 2025. And this was in the September meeting. Look at all these dots at around 3% and 3.5%. Look at all those dots around this point here. Okay, I want you to keep this in mind, because I'm going to switch to the latest figures from December and see how these have changed. All right, so now look at the updated numbers from the December policy meeting. Look at how all of those people who thought, the committee members who thought 3% or 3.5% would be appropriate next year, those have all but vanished. Only one committee member actually thinks interest rates should be at 3% or 3.5% next year. The majority of committee members now think that 3.75 or 4% is the more appropriate interest rate for next year. Let me switch back here. The majority of committee members previously thought 3% or 3.25%. Now the majority of committee members think 3.75 or 4% is the more appropriate number. So an increase of about 50 basis points of interest rates in 2025 expected.
Well, hang on. It's not an increase. It's less of a decrease, right? Hang on. Let's not get confused here. We're not increasing rates by 50 basis points. It's not declining as much by 50 basis points. Okay, just for clarification.
Interest rates. Now, this is their dot plot, meaning that when they go to vote, this is what they're going to vote for. And the chairman of the central bank takes these into consideration. The chairman's vote is also included here. So that means that interest rates are likely to be about 50 basis points higher next year than initially expected. And the same can be said for 2026. If you look at the dot plot for 2026, this is the updated number, where the majority of committee members are expecting something in the range of about 3.5%. And you can look at the previous numbers, where committee members, the majority of committee members were expecting something in the range of 2.75% as the majority of the committee members were voting on. So big increases in interest rates expected, and a 50 basis point increase for interest rates is a big move. It's a huge move. Interest rates don't move by all that much, all that frequently. So a move of this magnitude has large implications.
I am surprised because, a million years ago, before my time, really, I remember my parents telling me that they bought their house in the 80s and it was like a 13, not 1.3, 13% interest rate. And I mean, we didn't get anywhere close to that. We were thousands and thousands of basis points away from hitting 13% as our high, which makes me wonder if the economy is so dependent on low rates in order to keep inflation at 2%. What does that mean? If we had hit something like 10% on the Fed funds, does that mean the economy would have crashed? I don't know. I'm just guessing here.
And you've already seen that almost instantaneously in some of the, what I feel, in my opinion, were the most overvalued assets in the market, and that is Bitcoin and Tesla stock. Just as a proxy, I use them as investor enthusiasm and excitement for asset prices. You can see Tesla stock is down over 8% today following that announcement. It was actually up on the day before the central bank.
Mikey Mike asks, what influences the committee members on these percents? So, you've got your committee members all over the United States, and most likely it's regional to what they think about their regional economy, right? What would their regional economy be able to sustain? And so they plot that on the board to see where that fits amongst all the other votes. I don't know. That's more of a guess than anything. But I don't think that they vote blindly, right? I don't think it's like Survivor, where they take their vote, they stick it in the idol, and then the guy reads it out right in front of a tiki torch fire. I don't think they vote like that. I think that it's probably a lot more political, where it's like all the members of Congress who are one political party all vote together. I think it's a lot more like that. But I don't know what goes into that. That's a good question. Dave says, I remember my parents walking away from a deal for a new construction, had to convert from a construction loan to a regular loan when rates shot up to 17%. Dude, could you imagine? Like, do you know how difficult it would be to sell a house if rates were 17%? I mentioned this, ages ago, but my mortgage is at 3 5/8, and I got a 30-year mortgage. I have no incentive ever to move, right? Because if I move, for the same mortgage that I have now, I would probably have half the size of the house, right? Because I wouldn't have the same mortgage payment. I'd have to double the mortgage payment for the same equivalency of house because of rates going up. And if rates gone up 10 percentage points more than this, dude, it would be impossible to sell a home. Like literally impossible. You would have to have a fire sale on homes, right? A home that may have been valued at $1 million today probably would have to be sold for $350,000 or less, right? Because it's like, your mortgage gets exponentially more expensive as you add more interest rates to it. So, 17% is crazy. Jean-Louis says, I bought my first house in the Boston area. My mortgage was 21%. I refinanced a dozen times. Dude, 21%? It's like a credit card. Did you buy it on a credit card? That's crazy talk. 1989. I was out of diapers by then, but I was a lot younger.
Bank announced these changes for interest rates, and then Bitcoin is down 6%. These two assets were almost on a straight path upward ever since the presidential elections in November in the United States. Tesla, for two reasons, is having a decrease. Number one is that investor enthusiasm has calmed down because of higher interest rates. That means that people looking to make an investment can now invest in a ultra safe US government bond that's going to give them now more interest return compared to a stock that's riskier. And then secondly, when people are buying a car, they're usually financing that purchase. And with interest rates higher, they're going to be less interested in purchasing cars. And that's going to be bad news for Tesla. Tesla was already having to subsidize car buyers by giving them artificially
As a Tesla owner, I'm going to talk about that for a moment. I, at Thanksgiving, had my first range anxiety moment ever. And I know you've heard the story, but some people haven't. We were driving about 3 hours away. My wife had packed so much stuff that we couldn't fit it all in one car. So she has a Lexus SUV. I have a Tesla Model Y Performance. And I was like, okay, we'll take 2 cars, right? Me and the boys, my 2 sons, we'll sit in the Tesla and drive, and then you can take your car because there's no room for any other humans in that car. So she's driving down the road, following me, and it's in like a winter storm, and the wind's blowing real hard. The temperature's dropping in the 40s, and what was on the app, on the Tesla app, said I get there with 30% battery. I get in the car, and the car computer is different than the Tesla app, and it said I get there with 15% battery. I'm like, whatever, no big deal. And then I'm driving down the road, and about an hour into the journey, it says, turn around, go home, and charge again because you're not going to make it. And I'm like, what? You can't be serious. And then like my range estimate went from 15 to 11 to 7 to 4. And that's when it said, turn around and try again. And I called my wife and I'm like, listen, there are no superchargers where we're going here. I'm going to need to draft off you. So she pulled up in front of me and I drafted off her for the next 2 hours. As a Tesla owner, that was not a great experience. Not at all. But because Elon is now becoming so politically influential, I think he is going to, and this is totally a conflict of interest, don't get me wrong here, but I think it is in his best interest, monetarily speaking, to put in the ear of Donald Trump, make it a mandate. I don't know how they're going to do this, right? This is just Chris theorizing here. Make it a mandate where every gas station has to remove 1 gas pump and put in 1 2-stall charger, right? And it'll be a Tesla charger, of course, because that's the North American charging standard. And so it'll benefit him monetarily because every car that pulls in there, he's going to get paid, whatever, to charge on a Tesla charger. But if there is at least 2 chargers at every single gas pump or every single gas station in the entire United States, we no longer have range anxiety, right? And then if we no longer have range anxiety, people are more likely to buy the electric cars, which also helps him in the long run. So big picture thinking here, Chris is saying, I think that is a very viable situation, especially you could put solar panels on top of the all the awnings on the gas stations, right? Now, when you go charge a Tesla, it's not the best experience. It's really not, because most of the time the chargers are located on the outer banks of whatever station it is, right? And sometimes it's sketchy, right? Sometimes it's super sketchy. And a lot of times there's no light, no trash cans, there's no covering whatsoever. I think I've been to 1 charging station ever that was covered. And while there may be some stations, I went to Buc-ee's in Temple, Texas, that had 72 chargers, which was outrageous. Nobody needs 72 chargers. And then you go, other parts in the southern Oklahoma area was where I was going, and there's not one for 100 miles in any direction. It's like, do we really need 72 here, or could we take 2 of those and drop them over in southern Oklahoma? So big picture move here, right? I have no control over this, right? But I think Elon will do something like that. And then that will be like gangbusters for Tesla stock price, because why wouldn't it be? If Elon's incentivized and will basically make money on every time you charge, and then more people realize, oh, it is super easy to drive a Tesla when you can just charge it anywhere, right? And it really, honestly, driving around town is fantastic. I just plug it in every night like I do my phone, right? And the next day it's good to go. But on road trips, not the best. Really not. Dave says 21% is outrageous. Dave says, I already did that in Arizona for one of the northern counties when I was there. Started mandating electric chargers at stations and commercial buildings. Dude, well, thank you. I appreciate that, Randy. Maybe one day I'll get to use one of those chargers. Hybrid is the ticket. The new Hondas are embracing the self-charging electric car. Oh, I didn't know about this. I have to self-charging electric car. That sounds brilliant.
Lower interest rates at 0%, and then it was having to pay for that on the back end. Now that's going to be even more expensive for Tesla to implement, as interest rates are going to be higher for 2025 and 2026. So for all those reasons, I feel this might be just the tip of the iceberg here for these overvalued assets. That's what I think this could mean for investors. I was already skeptical of some of these overvalued assets, as you've heard me talk about extensively over the last several months, especially for Tesla. I've been talking about how I felt it was overvalued. But now that risk is even heightened, because The central bank has taken a more restrictive stance on the economy, realizing that things were getting a little bit bubblicious, things were getting out of control, too much enthusiasm in the market, and when there's so much financial asset price appreciation, that leads to inflation because investors take those gains and they go out into the economy and they make purchases with those.
Right, because when people feel more wealthy, they're more likely to go out and buy things. I think it's called the wealth effect, where, like, for example, if your stock portfolio is down 20% on the year, right, you probably aren't excited to go buy stuff. But if your stock portfolio is up 20% on the year, you're probably thinking, you know what? I'm doing really well, right? I am a financial genius. I need to go buy some more stuff. That is a real thing, right? You can look it up. Google it.
Gains, and that leads to higher inflation. So be careful out there. Did you know that over 90% of the people that watch my channel,
Bro, I gotta say, okay, this channel, new channel, Parkev. Hang on, let me make it bigger so you can see it. Parkev Tateslovian, CFA. I'm gonna rank this channel a 10 out of 10. And the reason being is that he didn't give us any fluff, right? He wasn't trying to say, buy AMD stock, it's at 52-week lows, it's gonna be the next big thing, right? No, dude was all facts-based, well said, came with receipts. So 10 out of 10. I like that. Outlier approved on that. So let's do our very last bit over here and say, if that was useful to you, share this with somebody who think you could use it. And let's do our member highlight of the day and our very last weekly winner circle for, oh, wait a minute. I clicked it too early. Our very last weekly winner circle for 2024. Okay, the weekly winner circle is so much fun because I'm going to give one of our members a $10 gift card to Amazon, a last one of the year. And all you have to do is post in our Discord and in the share your big wins section. And the rules are super simple. Just post over there and you couldn't have won it last week. And then you're entered to win. So let's see how it went this week. Let's see who won. So it was a 2 for last week. I gave it to both Michael Wales and Mikey Mike. I'm trying to find that note here so I can keep up. There we go. Okay. So who has posted since then? Miraculous. All right. So he posted. And Michael Wales made a huge gain on Walmart. Way to go. Dave posted. Oh, Michael Wales is not eligible, but Dave is. In fact, let me start pulling up the spreadsheet here. So I'm going to put in Miraculous. I don't know if I spelled that right. Dave. Let's see who else. Randy. And Randy again. Wes posted as well. And that's going to be it. So one of you 4 gentlemen is going to win a $10 Amazon gift card. And so I'm going to go to random.org and I'm going to put in, I was verified as a human. Did you see that? Only took like 2 seconds. I'm so proud of myself. I'm going to let it do a random number generator here, right? So this is 1, 2, 3, and 4. Whoever the number comes up with is the weekly winner circle for the week. And April will send you a $10 Amazon gift card on Monday. And this goes down in 3, 2, 1. Number 2, that's Dave with the win again. Congratulations, Dave. Dave, how many of these have you got now? 64 at least, right? Congratulations to Dave. You are the last weekly winner circle of the year. Congrats to @Dave for winning this week's weekly winners circle. And then I'm going to put @April will send, oh, wait a minute. They're wrong. April outlier. There we go. We'll send you the gift card on Monday. A little treat for yourself directly from Santa Claus. So we do that every single week. So be sure to share your stories in the Discord and tell everybody you can about Outlier, right? We are literally trying to take over the world. And I know you're already subscribed. Do me a favor and hit the like button. Now let's get back to trading in the Outlier Trading Room. So I'm a partner with Outlier, and this is my style of trading. But real quick, what is Outlier and how does it work? It's the world's best AI stock trading assistant. It allows you to save time, make money, and start winning with less risk with a 4-step process. Number 1, Outlier monitors how investors are reacting to changing market conditions, news, price movements, and the economy. Number 2, outlier determines if investors are acting irrationally fearful or greedy, and by how much. Number 3, outlier gives buy and sell signals when those irrational behaviors reach an extreme. And number 4, allowing you to get into the stock before the outlier move happens. And my style of trading, I call the golden ticket trading strategy. It always starts with the market. Now let's go take a look at the market, because it has changed a hell of a lot in the last couple of days. So we had this giant candle on December 18th selling off below everything, right? Under the 50-day. Yesterday, if you want to think about it, it probably did cross yesterday with the 10 and 20 under the 50. But as of right now, as of this moment, we have the 10 under the 20, but prices over the 50. So this is kind of the no man's land. You really want it to be 10 under the 20, price under the 50, or the opposite. But at the meantime, it's kind of in between. So if you are looking to put on shorts, just be careful, right? The trend is not, the trend has changed. I'll put it that way. But I wouldn't say it's conclusive just yet. But if we go into outlier, we have quite a lot of signals today, right? We have 27 new sell signals on the bear list with only 2 new sell signals on the bull list. And Mahesh was telling me that we should be having another update by the end of the year. So if you check into outlier in the next couple of weeks or so, you're probably going to see some more enhancements coming through, because as you guys know, we are constantly pushing updates to make this better. Taking a look at market breadth, you can see that the number of stocks with buy signals, that's the green line right there, has been steadily falling and is down to just 33% today. So only 33% of the market's bullish. And actually, let's go to the S&P 500 map. I've been eyeballing this like a hawk. Let's look at the 1 month performance. It's loading really slow. Mikey Mike says, nice, Dave. Oh no, did our stream crash again? Hang on, is everything working? Nice, Dave. Okay. Thank you. It's been a great year for everyone. All right, so going back to this, right? Where's the money gone on the last month? It is a sea of red, with the exception of the Magnificent Seven and Walmart, basically. Like, it's really ugly. The market is really, really, really ugly. This is just in the last month. And then you've got stocks, because the market is market cap weighted, right? And this map is also market cap weighted. The bigger it is on the map, the bigger the market cap it is. You can see some of these names, like Apple up 10% in a month, Amazon 10% a month, Google 8% a month, Meta 5% a month, and Tesla up 26% a month. These guys are holding up the market, right? If they go to zero over the course of the next month or so, the market's going to hurt hard and fast. So just putting it out there. I'm not very bullish on the market right now, especially where it's at. Oh, it's under the 50-day at this point. So if it's under the 50-day, let's do this. Let's go into the screener. Let's see. I haven't run this yet, so I literally have no idea. Go to the bearish screener. I've literally no idea if anything's going to pull through. So today's the 20th. Got a couple. ACHC. Now listen, here's my footnote for the day. I put this in the Discord and Mark echoed what I was saying, right? For those of you who are trading alongside in the trading room, today is the day when I would start shorting. But I want you to keep in mind, if you do start shorting with the holidays next week and you can't monitor your positions like you normally would, don't put any risk on in the market. And I'm being so serious about this. I'll never forget trying to trade on Black Friday, walking around the mall with my family with my face stuck in my phone because I felt like I couldn't take a day off. The market is always going to be there and new trades will come. But that time with your family is precious. Don't waste it. Remember to enjoy the time with your family over the holidays. Most likely, they're one of the driving factors to why you wanted to trade in the first place, right? And then Mark said, again, if you can't mind your positions like you normally would, don't put any risk on in the market. New trades will come, but that time with your family is precious and don't waste it. So I'm going to leave it at that. I'm not even going to pursue this any further. What I'm going to tell you is if you decide to trade, do so knowing that you've really got to pay attention to it, because next week is a holiday week and the week after that's also another holiday week. You may have heard of the Santa Claus rally, right? Or the January effect, right? That may or may not transpire this year. I would venture to say may not. But one thing will happen is that the number of participants in the market is going to collapse, okay? Let's say an example, is that there may be a million traders who trade every day. Next 2 weeks, both weeks, there may be 200,000 traders, maybe 100,000 traders, right? If that happens, volatility spikes, right? Because the market has to move farther to find a buyer or find a seller. If there's 10 times less participants, that buyer can say, I'm only going to buy it if it's way down here. Or that seller can say, I'm only going to sell if it hits way up here. And if you're the market participant and you need to move, you're going to have to move higher or lower very fast, more than you normally would, to meet one of those prices in order to transact the trade, right? So keep that in mind, is that volatility will most likely be elevated next week. Don't expect the Santa Claus rally, right? So many people, man, I can't tell you how many years went by when I was working in an office and people would be like, there's a Santa Claus rally coming this week. There's no guarantee of that. Don't put your bets on it, especially this year. Okay, just putting that out there. Dave asks, I do have a question on the screener. When bearish, do you want a negative expectancy or still positive? That is a great question, Dave. So I do want a positive expectancy still. So that would be outlier signal return positive, right? Reason being is that Outlier is built as a long only platform, right? And so I hear where you're coming from. Do you want a negative expectancy? But in that case, you're somewhat taking the data, and while we are reversing the signals, you're reversing the outcome that you want to see, right? So I would not look for negative expectancy. I would still leave it as positive expectancy. But I absolutely see your point there. That's what I thought. Very cool. So yeah, trade at your own risk next week and this week. Honestly, I would say don't. I would say go enjoy your family, right? I can't tell you how many times, how much stress that I've put on myself by trying to trade on vacation, trying to trade at holidays when I didn't have to. Did I make any money? Maybe. But what I do remember is not the money I made or money I lost. What I do remember is the time commitment that I lost, was the time that I wasn't spending with my family and enjoying myself with them. That's why we trade, right? Is to have more money in our pocket today than we did yesterday for not only us, but for the people that we love, right? Sorry to get sappy on you, but it's the truth, right? So that's going to wrap it for today. Thank you so much for being an outlier. It's going to wrap it for the year. Thank you so much for being an outlier. We couldn't do this without you, and we want to pay you back every single day by helping you save time, make money, and start winning with less risk together as a team. Now, this deal ends at the end of the month, at the end of the year, saving 45% on the annual plan. It's literally just 90 cents a day to get Outlier for the whole of 2025. Definitely think you should take that up. Let us know if you need anything over in the Discord. I'll be around. You can still chat in the Discord. We'll still all be there. Mikey Mike says, how do you screen for the 5% rule? It will be built into the screener here in this next update that Mahesh is doing. In fact, I'll show you where it's going to be. Over here, it's going to be a 0 to 5%, right? Where it says price change 5 days, 0 to 5%. Meaning, in the last days, is a 5% up or down, somewhere in between there. That 10% range from, -5 to plus 5%, is it somewhere in that range, right? Because as of right now, we have 5% or more, but we don't have 0 to 5. So it'll be right there, like I say, in the next update, which should come really, really soon. So thank you all again. Really appreciate the time to hang with you. Be sure you tell everybody about Outlier, right? Especially to hit 2025 on the right foot. And of course, I know you're subscribed, but hit the like button. Have a fantastic holiday, a fantastic new year. I'll see you again on January 6th. And you know what? Like I say, always you can hit me up or anybody else up on the Discord. And again, from me to you personally, thank you so much for being an outlier. Merry Christmas and have a happy new year. We'll talk soon.